morning, class. Hello, good morning, class.
Good morning, sir.
Good morning.
Good morning, sir.
Good morning. Good morning.
Good morning.
Morning, sir.
Thank you so much. Yeah. So I'm excited to be in this class this morning, and I want to believe it's going to be a very interactive class. Unfortunately, we have so much to talk about half time, so it's going to be a crash course. But trust me, I'm going to emphasize the key points so that you will make the optimum use of this opportunity. So the places that I should lay emphasis on, I will let you know for the purpose of the exam. Then beyond the exam, I will equally emphasize some key issues that you are supposed to implement in your business, because I want to believe that all of us here are into agency banking. We are not just taking the exam for the purpose of acquiring certificates. I want to believe we want to improve in our work and in our business. That is the idea behind this. So to be a certified agent banker, you are supposed to have the requisite knowledge to back it up as a consultant in your field. So I'll be taking it in both ways. When it gets to knowledge, residual knowledge you need to run your business, I will emphasize that. And then when it gets to the exam, where you need to concentrate on some things you need to take note of, I will emphasize that as well. Now, this particular paper is a technical one. This particular exam is quite very, very technical. I must tell you right from the beginning. So you need to pay a little more attention in order to be able to succeed. But not to worry, I've been able to simplify it, because the first material was somehow a bit more difficult to read and go through, but I've been able to turn it into something that is lighter, and that will be more easier for you to read. So I believe you are going to get the material. So let me go straight to share my screen. And if you can see my screen, please, I just want you to indicate, let me know if you can
Yes,
see
sir.
my screen.
We can see your screen.
Yeah,
You can see, sir.
Okay, thank you. Yeah, so this is the course that we are going to take now. So part of the agency banking certificate study pack, we have risk control and reconciliation. Now, this is for the intermediate level. So I want to believe that everybody in this class have done the foundation level. So this is for the intermediate level. This kind of course, during the time I took CIBN for the banking pack, so that is for the associate class, I passed through this kind of course. So I was wondering why the curriculum is almost looking alike. So what I'm trying to say here now is that there is no longer much distinction as you are going up the ladder. You are almost into banking. So that's why you notice that as we are talking about agency banking here, we are equally talking core banking, because all of them are interwoven. Agency banking is just an appendage of core banking. What is actually happening in the main banking hall, in the main bank branch, is almost the same thing happening in the agency banking outlet. So that's why we are talking the same thing. So let's pay attention. Without much ado, let's go right in. Okay, now let me explain these three key words here that we have. We have risk, we have control, we have reconciliation. So I want to believe that risk is quite easy for us to get because we all know what risk means. Then control is equally a bit easier, but let me emphasize on reconciliation. Last Saturday, I did a course as well that involved reconciliation. But the reconciliation there is quite different from this one. That reconciliation was about financial transactions reconciliation, bank statement reconciliation, daily transactions reconciliation. But this reconciliation is a bit different from that. Now, the difference is the reconciliation we are talking about here has to do with risk and control. So as we go forward in this course, you will get more information and you understand why I'm saying when you see this reconciliation, we're not talking about audit trail call over. We're not talking about trying to reconcile transactions and amounts. Okay. So I don't know. This is just a little bit about me. My name is Dr. Bion Oti, as you have already said. So and a resource person just like this. I believe you are going to get this material and you will see more information about me. In case you want to reach me, that's my phone number. I'll be open to assisting as many people as reach me because this course is just a little within 2 hours. I don't think we will be able to cover everything. So in case you still have further questions on challenges you have, I'm open to be reached. So you can WhatsApp me on that number. But please, really don't call me. I may not pick your call. If you are not a familiar person that has been calling me regular, but if you send me a chat and then explain yourself that we had the interaction from this class, yeah, I will now chat you back. And then if there is need for us to talk on the phone, we will now move to that level. The last class I had, quite a number of people contacted me and it was fine. I was able to resolve their challenges. Okay, so just like a normal physical class, I will expect that we open ourselves to explore, to learn, to have fun, and to participate completely. So it will pay you if you pay attention, even though nobody is monitoring how you are, doing in the class. But just pay attention. Make sure you don't distract us. Don't put your mic on when you are not speaking to the class. Okay, let's dive right in. This slide is quite much. In fact, when I was making this slide, it was almost 200, and I had to reduce it to 100. Then I still had to further reduce it to what it is now, about 90 something, including sample question, multiple choice question, scenario based, and knowledge based questions. So, but all the information I put there is based on the assumption that you may want to have the knowledge, because everything I put here is right from the curriculum, extracted from the curriculum. So they are all important. But I will emphasize some key places for the purpose of the exam, so you don't have to be lost inside the entire information. Okay, so you notice that I'll be skipping some places and I'll just be mentioning some places. Any place I get to and emphasize, please just take notes of the places. Okay. So when we talk about risk, risk involves a lot of things. When we talk about risk. So now let's look at understanding reputation. So part of the things we'll be talking about in this course is reputation, reputational risk. Now, risks that has to do with both the reputation of an individual or a corporate entity. So pay attention to this one now. What is reputation? A question like that can come in this exam. Reputation, as it has to do with an organization. What is reputation? Reputation is a collective perception stakeholders hold about an organization, shared by actions, communications, and ethical standards. I'm going to give you sample questions that you may likely see in an exam of this course. So you will see how some of the questions can be extracted from here, and you can now even frame some other questions for the purpose of your study. Okay, so you may not necessarily need to cram some of this in, just understand what it is, and during the exam, just say it in your own words. But if your brain is still very active to cram them, there's nothing wrong with that. Okay. Now, when we are talking about reputation, we have three key elements that we are looking at. We are looking at trust or trustworthiness. We are looking at integrity, and we are looking at transparency. So trustworthiness means consistency in fulfilling promises and commitments. Then integrity means adherence to ethical and legal standards. And the transparency means being open to communication with stakeholders. Okay, now, in an exam, you may be asked to mention the three core concepts about understanding reputation, or three elements that describe reputation. All you just all you are required to mention is trustworthiness, integrity, and transparency. So all these things combined to show what reputation means. Okay. So now let's go to another one. Please, just a minute. Alaji, I will call you back after this training. I'll be training now. Thank you. So now let's look at good versus bad reputation, a comparative analysis. So this one is quite simple. Good reputation and bad reputation. Good reputation has to do with high customer loyalty, strong brand equity, positive media coverage. And then bad reputation has to do with negative customer reviews, frequent regulatory fines, and high employee turnover. Now, this is applicable to both individuals and corporate organizations. Like in your own business, if your reputation is bad, these ones will be the consequences of having a bad reputation. If your reputation is good, this is the same thing. If it's compared to a corporate entity, it's almost the same. Okay, remember I said I'll be mentioning areas of application because there are some other things that will be useful to you that are not part of this course curriculum. I will definitely mention them, especially if you are into agency banking like me. If you are doing POS work, I will mention there are some nitty-gritty things that I will emphasize in the course of this course. But I will still tell you that you will not see it in the exam, but it is good for you to know. Okay. So let's look at keys to maintaining a good reputation. Please mark this one because it's very likely you see them. It's in the exam. Now, we have three keys. One is ethical leadership. Two is being customer-centric. And then three is CSR. These are the key three major elements of maintaining a good reputation. This is mostly applicable to corporate entities or companies. Okay, don't worry. We are going to look at questions that are related to some of these things that we are talking about. We can leave this slide. Now, cost of a damaged reputation or high cost of a damaged reputation. These are the implications of having a bad reputation. You have loss of customer trust, you have financial losses, then you have regulatory sanctions. Now, when we talk of damaged reputation, that does not mean that the organization has gone down or the organization has become bankrupt. Some organizations may still be operating, but their reputation may no longer be good. So they will have all these things happening to them. There are some organizations like that. I don't want to mention some organizations specifically, but just when you look through, you will see that there are some institutions that were flying high based on reputation and the perception people had about them some years ago. Now, the reputation has been damaged, their goodwill has declined. If you check the balance sheet of some organizations, like some of the banks, you will see goodwill as part of the elements in the balance sheet. Now, when you have a damaged reputation, your goodwill will go down and you are most likely to have all these challenges. So in an example, we can just have cost of a damaged reputation to an organization. We have loss of customer trust, financial losses, and regulatory sanction. Now, this is not only three. I can even extend it to 10. But in the exam like this, most of the time you are asked between 3 and 5. Okay, I don't know. Let me engage the class a little bit. Who can mention the fourth one that is not here? Apart from loss of customer trust, financial losses, regulatory sanctions, can anybody in the class give us one more? Let me be sure that we are following. If the reputation of, let's even use an
For,
individual. You can raise your hand.
for,
Just raise your hand. Don't speak directly. Raise your hand. I'll call you so I know who is about to speak. Or go ahead and speak if you can raise your hand, please. Tell us
there
one
will be
more. Okay.
poor media coverage.
For media coverage, exactly. You will have less media attention. Who can give us one more? Because why I'm saying this, you may just say, we just taught you 3 here. Then you go in the exam and you see 5. But the most important thing is to understand what you are expected to, to say.
Well, there could be
If an
litigation.
individual, litigation,
Yes.
people will take you to court and you spend money, okay? And you waste your time and you can even close down. You can close down as a result. So there are so many consequences.
Staff turnover.
Turnover, yes, staff
Yes,
turnover,
labor
staff
staff
churn.
turnover.
Yes. Thank you so much. At least I'm happy we are following. Okay, so these are the risks that you avoid. In fact, even if it is a small POS shop, the whole of these things is still applicable. So one of the most important things you need to do is make sure you have a very good reputation. Now, let me tell you, sometimes an individual may have a bad reputation or maybe an organization, not necessarily because of any wrong thing they have done. We will get to that where you will see some of the reasons why some person's reputation may be damaged or an organization's reputation may be damaged, not because they have done anything bad. It could be instigated by somebody from somewhere. We are going to look at it, so we'll look at how to mitigate such situation. So now this is overview of reputational risk. We have unethical behavior, which compromises integrity. Then we have operational failures, which disrupt performance. Then we have negative publicity. Now, you see, unethical behavior could be internal. The organization, sorry, let me see whether I can get let me see whether I can get my highlighter so that I can be highlighting some of these things. Just a moment. Come in. Okay. Yeah. So I just want so that anytime I point, you see exactly where I want to highlight. Okay. Can you see this highlighter that I'm using? Can you see it? Please, if you can see it, just let me know so I'll be sure.
Your screen
I'm
is not
trying
in
to
a full mode yet, sir.
huh?
Okay, I like something, sir, so we can confirm.
Can you see it?
No, sir.
Yes, it's very obvious. The highlighter
Uh-huh.
is the cursor is making reference to that thing that looks like a arrow, like an arrow.
Yes, the cursor and then something that's yellow that is hovering over what I'm trying to explain. Okay, let's move forward. So now, like I was explaining, the unethical behavior can come from internal factors like your staff, yourself, the organizational policy, and anything from the internal control, maybe the internal system or compliance system within the entity compromises integrity. Then operational failure can come from the operational team, the control team, even the marketing team within the organization. So these two are internal. Then another one is not within the control purview of the organization. This one now is outside what you can control, negative publicity. And it usually comes from outside, external factors. So that's why I said your integrity may be at risk, not because of any wrongdoing you have done, but because of negative publicity or some people, as a result of competition or as a result of incitement, can be incentivized to raise this one against you. Okay, so let's be aware of that. Now, in an exam, we can be asked a question that includes this one. For instance, what external factor can affect the reputation of an organization? What external factor can affect the reputation of them? They will not tell you operational failures, political behavior. They say a lot of things, and they mention negative publicity. That the answer is negative publicity because that is the external factor that can affect your reputation or the reputation of an organization. Okay, perspective. I'll just mention this one and move forward. Perspectives of on reputational risk, Basel Committee, Financial Stability Board, and the corporate view. So when we come to Basel, because we have a lot of policies on risk and compliance that has to do with Basel 1, Basel 2, and all those things. So Basel is a place in Switzerland. So these were places, there was a time some organizations gathered in this place and they made policies that has to do with risk management and all that. So we are going to look at the details. Okay. So let's move forward. The whole idea behind all the ones we have talked about before will ensure that an organization or an individual tries to build trust, embrace ethics, and ensure transparency. So that's just the whole idea, and that's the takeaway in that course. Okay, let's move forward. Another thing you need to note is sources of reputational risk. So I've outlined it. If you check this slide, by the time you get it, you notice that there are lots of wordings or a lot of things. I try to pick the key points and summarize them by the side. So if you have the full article where I made this summary from, I think it's almost up to 200 pages of Microsoft Word document. But on this PowerPoint, I just highlight them. So if you're asked to mention sources of reputational risk, all you need to do, you may not necessarily need to start reading all this. just it has already been highlighted here, like operational failures, legal and regulatory issues, ethical lapses, customer complaints, social media, poor financial performance. I think this one now means poor financial, because if you perform well, you do not have any reputational risk. Okay. So then the negative publicity that we spoke about earlier can come from the social media or from the mass media or from anywhere. So we are going to be a bit faster because of our time. We have quite a lot to cover. And I want us to quickly get to the question type so that you look at the kind of questions that will come from this course. So measuring reputational risk. Now, this course is both an art and a science. And being a science, there has to be a way to measure what we call risk. Because if you are mentioning risk and you will not be able to determine what extent of risk, what gravity of risk you are talking about, then you will not be clear about the risk or the implication of what the risk would cause. So these are the ways you can measure risk. We have media monitoring. Caller, I will call you. We have media monitoring. We have customer feedback analysis. We have reputational index ratings, and we have regulatory and compliance reviews, and we have financial performance indicators. Now, every company or every organization is expected to put this in perspective. If you have a risk department or you have an internal control department or compliance, these are supposed to be part of the KPIs they are monitoring to ensure that the organization does not suddenly become get to a point where risk will affect their reputation. Okay, Kola, briefly speak now. Tell us.
Sir,
Yeah.
I just want to, yes, I want to make a suggestion, which I feel might help us too, because
Okay.
we are all very busy, and I can't tell you lies, I've been off what is happening. So to save us time, I don't know how long this presentation would take. I will just suggest, if you graciously want to accept that we go to the questions. It will save us. So some of the questions,
Okay.
we
Yeah,
can come back to this place.
I
It will
understand.
help us a lot.
I want to
Yes.
mention some of these things that will lead us to the. I know what you are saying. We have about 2
Yes.
hours to go. Yes, we have about 2
Okay.
hours to go. So I will use
You,
about 1 hour to scan through this, and we'll use about the remaining 1 hour to
I
go through the
saw your slides. They are 92, and I know they are much. If we spend 1 minute on each slide, that is almost 2 hours. That's why I raised this. Thank you, sir.
Okay, don't worry. I just want to start, then I will now move that way you want us to go. Okay, thank you. Any other suggestion and concern so that we can move? Okay, no problem. So when I get to a point, I will straight go to the question because I know I will have to go there. Okay, so these are the ways you can measure reputational risk. Then strategies for maintaining reputational risk. These are the strategies: proactive risk assessment, crisis communication plan, corporate governance, stakeholder engagement, reputation recovery. Any of these things, where you are going through it, if you don't understand it very well, you can chat me. I will explain further. Okay. Okay, let me explain this board of directors. When we are talking about corporate governance, that is where board of directors come. And this is a complete topic in this curriculum. This is a full topic. So we'll spend a little time on it. Now, for the risk that has to emanate from this, we need to understand how the policy on board of directors, reputation strategy, and governance, how it comes about. So the key action is how to integrate policies, how to promote ethics, and ensure accountability. Now, why is a topic like this important to discuss? A company will be at risk if the policies that should guide the operation of the executive management is not in place, or if it is in place, is not being followed. So that is why this is part of the cost. Okay? So management is responsible for maintaining policies that make sure that organizations are not, it's just like even if it's an individual enterprise, like your own personal outfit. If you don't keep the policies in place or you don't enforce them, it means that you are inadvertently making your organization to be at risk. Okay. So you just have to understand that. Okay, so this one is just about risk, compliance, and legal teams mitigating threats and all that. Okay, let me see whether the approach that was suggested earlier can help us to move faster. The approach Kola suggested. So let's look at some of the questions and then compare them to what we have learned so far. Let me quickly run. I think from there we can now be touching some of the items. Okay, let's start from the multiple choice questions. Let's start from the multiple choice questions. So what will happen is question 1, 2, and so on. When we ask a question, if you know the answer, you can raise up your hand. Get it, I'll tell you. If you don't get it, I will tell you. Now I have 20 multiple choice questions here, just for sample. So in the exam, they will not be 20. There will probably be more than 20. So for your information. But these are just how the samples will look like. Now, based on, I'm sure we have covered question 1, question 2. Okay, so at least we have covered question 1, and everything here is in this course, is in that manual. Okay, so who can answer question 1 for us? What is the meaning of reputation in business? What's the meaning of reputation in business? I can easily go back to the slide. You see it. Reputation, a company's tangible asset. B, the overall perception stakeholders have about an organization. C, the financial strength of a company. D, total revenue of a company. E, number of customers a company has. Okay, Salihu.
Yes, the answer is B. The overall perception of stakeholders have about the organization.
Exactly. You are correct. Thank you so much. Okay, number 2, the reputation reality gap theory suggests that. Who knows the answer of that one? Reputation reality gap theory. Have we touched this one? I think let's look for reputation reality gap theory.
Sir, the answer is B.
The answer is B. Have we touched it? I was started going back because I can't remember that we touched it. Who answered this one?
I answered. I said it's B.
Okay.
And I guess
okay.
it's B.
You are correct. You are correct about the answer. Okay. It's just that I can't remember mentioning it, but it's in the slide there. Answers it very well.
Sir,
Yes.
what we should just make the class to understand that if there is no balance between performance and public perception, then there's reputation. I mean, there should be an equilibrium between
Exactly.
Both.
Let me explain what the gap is now. So the way you see yourself and the way outsiders see you as an organization, there should be a balance. There shouldn't be a gap. Now, the reality gap means the gap between how you see yourself and how the outsiders see you. That is why organizations have public relations in order to mitigate or to reduce the reputation reality gap. So what this is actually talking about is that you may be seeing yourself as doing well or you are good in the business, whereas outside there, you may be perceived otherwise. I don't know whether we are following it. So that the answer is B because the company's true performance and public perception must what? Align. So if there is a perfect alignment between how the company views itself and how the public perceives it, the gap closes, tends to zero. It's not wide. So the wider the gap, the wider the risk. The closer the gap, the smaller the risk. That is it. Okay, so when we get to question number 5 on the objective test, we will now go to scenario-based and the knowledge-based questions. So if we can deal with the questions, we can now start going through some of the slides, and then I will give you a chance to ask all the questions you want to ask. Who can answer number 3 for us? Which of the following is not a key to maintaining a good reputation? Just note the questions here, I grouped it because
D.
all the things in this course are grouped into about 4 different chapters or 4 different sections. The first one has to do with reputational risk. The second one has to, so I just made it very clear. The second one has to do with the human element of cyber risk. The other one has to do with risk and governance in the digital world. And then the final one has to do with types of risk and management strategy. So I group them this way. If you can cover all this, you'll be good to go. Okay, number 3, Salih said something. He said number 3 is what?
Yes, the answer is D, sir.
Joseph
Ignoring
Ayamu.
customer feedback.
Joseph Ayamu.
Yes, the answer is D. The answer is D. I've already answered it in the chat box. The answer is D. Ignoring customer feedback.
So the way you plan answering this thing is like this course has already been covered by you guys. Okay, number 4. When we get to 5, we go to the other ones. Number 4. One major benefit of a good reputation is
C.
The answer is C.
Yes, the answer is C. Okay, 5. Which of the following is a consequence of bad reputation?
B.
Yeah, you are correct. Okay,
B.
You are correct. Let's quickly go to the knowledge-based questions.
Sir, sorry, sir. Sorry for coming in. I thought the questions we are taking, they are all MCQ. Or have they changed, the exam procedure? So one will know what to do. Because if they are MCQs, we might not really take too much time on this kind of questions.
I know why
except you want to give it to us for knowledge sake.
I explained myself from the beginning that the essence of what I'm teaching here is not just for the exam, it's for you to know. Do you understand? And why this one comes in is somebody may get the multiple choice questions because there are options, not necessarily because he knows what he's answering. He just use elimination to know this one, the ones that are not the answer, and then answers the one that is correct. Do you get my point?
So it is elimination we need now.
So I want you to have an idea, understand what we are doing. That's why I brought this. Do you understand? And then when we get to the scenario-based questions, I will relate it to what we are doing in agency banking. So please, let us just do it. We are in a class, so we have all the opportunities to explore all options. Okay? Yeah. So knowledge-based question 1. What is reputation reality gap theory as discussed in reputational risk management? Who can answer this one? Who can answer this one? And
as from the question we had the other time, 2 key things are important in reputation reality gap. Number 1, performance. The organization performance and the perception of the organization in public. There must be a balance between the performance and the perception of the organization in the eyes of the public. So when there is a balance, the reputational reality gap is closed, and it won't be an issue of a risk to the organization.
Okay, thank you so much. Any other contribution, any other different opinion or similar opinion? Okay, he is correct, but the gap actually is mismatch, just like he observed, is mismatch. If the where the company views itself does not match with the perception of the public. So there is a mismatch between how an organization sees itself and how stakeholders perceive it. Thank you. Okay, who can list this one? List for we've not gotten to cyber risk, but let me see how many of us can list 4 causes of human element in cyber risk. We have it in the course there. From here now, we'll go straight there. Who can list 4 causes of human element in cyber risk?
1, when training is not done and somebody that doesn't understand operates the system, I think that could cause for human risks. And 2, when access control is not properly made, that too also could lead to human risks. I think others should try. I hope I've done well. Thank you, sir.
Yeah, thank you. You've done well. Please, I want the class to be active. I want the class to be active. This course, I've actually taught a bank this course, and we did it for 3 days. For you to know that this thing we are trying to do in 2 hours is something that is really large and something that is really practical. So he did write. Okay, let me just relapse some of the answers.
Sorry,
So
sir.
you just okay, go ahead, Emmanuel.
Sorry. For somebody like me, the truth of the matter, I've never read any of these our courses right now. I don't know what happened. I was not getting updates and all of that. I just got to know about all of this yesterday now. I trust God shall be able to scale through for sure. It's just that they are so voluminous. I don't know where to start. But let's not see how it goes.
See, let me tell you, all these questions now that I have selected, if you can answer them very well, you will pass this course. Just these ones. You understand? That's why I had to make it look this way. And if you start from the question, I'll give you the answers to these questions. So, though they are not in this, the answers are not here, but I'm going to share it with Israel. So he'll give it to you exactly the way it is. Okay, I'll share the answers. I'll get the answers, share it with Israel. He will share it with you guys. So
Right,
I'll do that today. But if you can look at these questions and look at the answer and know at least that one, you will pass this course. I'm very sure of what I'm telling you. Okay, so but let's move forward. Who can further help us in answering this one? List 4 causes of human elements in further help us.
Social engineering.
Good. Social engineering, phishing and social engineering, weak or reuse passwords, cybersecurity. That is lack of training, unintentional errors by staff, and so many of them. Let's just go straight so that you see that these things are here. Let me quickly go to the human elements in cyber risk. Okay, this is it now. Understanding the human element. So that question is from here. Okay, so when you get this, you can easily read up here. Trying to move this. So you see, we have social engineering here. Then we have if you just go through this, you see the answers, all the answers to that particular question. So I just summarize them here. Okay. The human element, mitigate vulnerables caused by human actions, then implement training, foster awareness, and all those things. So they are just here. Let's go ahead and continue with the questions. Then I want us to look at the scenario-based question. So you have an idea that can equally come into the multiple choice questions, but they will twist it like that so that you'll be able to know whether it's something you can apply. You know the application. Okay, let's look at this. A Nigerian agency bank recently faced a backlash after an event was caught on camera, treating a customer poorly. The video went viral on social media, and the public perception of the bank dropped. So this is talking about reputation. What kind of a risk has the bank encountered, and what internal stakeholder actions can help manage it? That let me see how many of us can look at it from a practical perspective. Who can help us answer that one? Anybody? I just answered the question now. I just answered the question. I want us to use
Yes,
our.
you gave us an answer already. Now, but the only
So
one, how can stakeholder action help manage it? Now, this organization now has faced already perception risk. Now, the interest of the public dropped. They would need to do so much to bring back confidence of the people on them again. Probably do an apology
no. I mean,
for that and make it public also. I don't know. I don't know if that one serves.
Yeah, but I think
okay.
In addition to what has happened, customer service is poor, so I think they have to train their staff and make them come abreast to the reality of what they are doing when it borders on customers. I think that's the stakeholder action, one of the stakeholder actions that should be taken.
Yeah, you guys are all correct. The bank encountered reputational risks, and then internal stakeholders like the customer service, especially their heads, their leaders, and then the compliance and control officers, and even top management. They should initiate training, enforce, and the conduct of policies, and then they engage their PR in order to recover their reputation back. Okay, let's look at the second one. Chinedu, a field agent for an agency banking platform, uses the same simple password for multiple banking apps. One day his account is hacked and the customer data is compromised. So the question is, what specific type of cyber risk caused this breach and what could have prevented it? You can attempt this one. Every answer to this question is in the manual, but I won't bother you to go through the manual in order to get the answer. I will send all the answers after this training. But let's see how we can answer this. And one good thing about this course is that even with the knowledge you have already, you can answer some of them because they are not that difficult because you're already doing some of the things that we are talking about here. So let's attempt to answer with the knowledge you have already and see how far we can go. Who can answer this number 2? Okay, the answer I have for this That number two is this is human error. This person already has made a mistake. He uses the same simple password. You know, password is not expected to be simple, but this person uses the same simple password, and you are not supposed to use the same password for multiple applications. But he just did so. That is human. Okay, and then I just showed you. Let me get to that page where we have a two-factor authentication and all that. Let me get to the page. So where the answer can come from. Okay, yeah. So this is it. These are authentication passwords of authentication methods. This one now is how do I push this? Okay. So this one now is different ways you can authenticate a transaction to make sure that it is safe using something you know and can remember, like password or PIN. So this one now is something you know. There's something you have, which is something that you can be identified with, something like a security token, a physical or virtual. A token can equally be on your phone as an app. Then something you are, which is a biometric. So like your fingerprint, the retina within your eye. Okay, and then some other human identity methods. Okay, so that's different ways Chinedu could have used to make sure that it did not use a simple password. Then we have benefits of two-factor authentication. Now, when we talk about two-factor authentication, it's just like using more than one entity to authenticate a transaction. Like if Chinedu had used two-factor authentication, maybe apart from using password, he probably added token to it, or maybe his biometric, that error would have occurred. So these are alternatives to two-factor authentication, password manager, single sign-on, biometric authentication, and then behavioral analytics. Okay, so you've seen how the questions can come and some of the likely questions. The most important thing here is try to read to prepare for the exam. Because honestly, as you've said, now this is not something we can talk about in 2 hours, but at least the essence of the class is to bring you up to speed, give you an idea of what you are likely to see and all that. Okay, let's look at number 4 and 5, and then we'll relate it to the material. Funke, a branch manager, wants to promote cyber security culture within her team, but doesn't have a technical background. Suggest 3 techniques she can use to create awareness of cyber risk among her staff. Who can answer this? Now, let me, why I brought this question is for you to know. Most of the answers that you need in this course is training. One of the key answers, like most of the questions that you will be asked in this course, is you need to mention training, because the idea of risk and control and reconciliation is to emphasize training. So if you are asked all these and say suggest techniques that can be used to create awareness, just training, just this thing we are doing now. Okay, so one of the things we mention is training. Then cyber security awareness and tips. Then we already know about social engineering. We already know about phishing. So you can now create regular awareness or simulation of phishing and social engineering. And you can mention some other things that you know as part of the answer. Then number 5, an agency bank deploys a new mobile banking solution without consulting its IT governance team. Later, several security issues arise and customer trust is eroded. So this one is talking about corporate governance and IT, information technology. So which governance principles were likely violated, and how can proper corporate risk governance prevent this? I don't like how cold the class is. Is this not making sense? Is this not making sense? Because I know this is a senior class now. It's not for national level. So that's why I believe that we can go from the questions, the answers. Number 5. I need a big hand up. Can I call somebody? Who can bail the cat? Which kind of which governance principle we are likely? If somebody did something without consulting the particular unit or particular section within the organization that should be consulted to advise better, what exactly is that? Sometimes you use your number 6. Sometimes you use residual knowledge to answer certain questions. So if it's I will just that is involved was not consulted. So the governance principle that was presented here is stakeholder inclusion. The stakeholder, just like a team from outside comes to implement something, and the people that are actually the users or the actual internal people were not consulted. So they were excluded from it. Okay, so is stakeholder exclusion or lack of stakeholder inclusion or anything like that. Okay, so now the next question is, how can proper corporate risk governance prevent this in future? If you go through this slide, you see functional involvement and the security assessment, security risk assessment. Every department within the organization already has a means of assessing risk. I've already told you that risk can be measured. There is a way to measure risk, and then to know how a particular action can be risky to an organization. So all those ones are very important. Okay. Okay, so there are some other kind of risks that are not part of this curriculum. I really need to mention this. If you're actually in agency banking, like me, I've lost a lot of money from different locations as a result of some risks that are not necessarily in this very course. Like most of those are human error related, but they are physical induced. They are physically induced, not actually system induced. Now, why I'm talking about physical risk and the digital risk is because most of the risk you see in an outlet, like an agency banking outlet, are human physical risks. But if it is a bigger organization, like some of our principals, like the financial institutions and the bigger organizations, what you see there are digital risks. That's why this course is emphasizing more on digital risk. In fact, over 80% of the losses organizations that take place in organizations, losses our organizations incur are from digital risk. That is why most of the things we are talking about here is digital risk. But for smaller outlets like the one of you and I, we will have physical risks as part of the losses that we encounter. Like there is this one that is happening recently now, where an Okada man, somebody will use a motorcycle and carry another person. They will come close to a POS shop. Then the motorcyclist will be pretending as if that person has not paid him. He'll be telling him, please, pay me, give me my money now. Why are you wasting time? Why are you wasting time? Then that person will now come down from the motorcycle and rush to the closest POS shop and say, I beg, you bring out his ATM card and give to the POS person, say, I beg, can you just give me 10,000 naira or maybe 20,000 naira? So let me just give this man, let him go. I want to withdraw 50. So you just give me the balance when you are done. Then unknowing to the POS person that both of them are together and there is no money in that card at all. In fact, the card does not even belong to him. He picked it from somewhere. So the POS person will just give him 20,000. He will count it and then pretend as if he will leave his card with the POS. Pretend as if he wants to go and pay the Okada man 20,000. And so that the Okada man will go. Before you know it, he will now enter the Okada and the Okada man will take him. Before the POS person will realize they have already left and he now start shouting. Now, this one is human error. What is a mistake the POS person has made? If you are trying to do cash in and cash out to give somebody money, the processes supposed to be followed to the letter. Like you have to collect the ATM card, slot it into the POS, and then the person will now authenticate by putting his password, and the transaction must go through. You must see approved, and the printout must come out before you are sure that this account has been properly debited before you now pay money. Okay? So now, trying to pay somebody because the person said, I want to withdraw 50, just give me 20 now, let me pay this person, let him go. They have created that confusion by making you be under pressure. They've created some kind of pressure that they are really in a hurry. And anytime any operator is under pressure, there is bound for the person is bound to make mistake. So these are some of there are so many things that happen. I noticed that in the previous class I had for the foundation class, I noticed that some people don't really think that printing out a transaction and be sure that it has shown approved is important. But if you have a POS shop, you will notice that a lot of money has been lost as a result of people not being and not waiting to see approved on the POS both the printout and the POS itself to see that word approved before paying out money. And that is human element in risk. Okay. So I don't know. Our time is going. If you have questions, you can raise up your hand though. There's another one there's another part of this slide I want us to look at. It's very important. Let's look at the Basel 1, Basel 2, Basel 3. So I will explain what that means in the risk governance. Okay, we're going to look at this Financial Reporting Council of Nigeria because it's part of the curriculum. But let's look at Basel Committee on Banking Supervision as it has to do with risk governance network framework. Okay. Now, the Basel Accord, this is just what I want you to know. It's not something too complicated, just something simple that you need to know. The Basel Accord are international regulatory framework designed to enhance banking risk management and financial stability. In fact, the first day I entered into the training school of First Bank, that was where I learned about this Basel Accord. It was difficult to understand that time, but with time, I started getting an idea of what they actually mean. So the Basel Accord are international regulatory framework designed to enhance banking risk management and financial stability. Now, what I want you to note is differences. Basel 1, what Basel 1 is talking about, what Basel 2 is talking about, and what Basel 3 is talking about. So Basel 1 focus on capital adequacy requirements, ensuring that banks hold sufficient capital. So when you hear of Basel 1, what Basel 1 is talking about is capital adequacy. That was what led to bank consolidation. So the idea of that banks within Nigeria, they must capitalize up to a certain limit. That is borrowed from the idea of Basel 1. So the assumption there is that if the bank is properly capitalized, if the capital is sufficient and adequate, it means that the insolvency of the bank or for it to go distress will be very, very low. The likeliness of insolvency or the bank crashing or becoming distressed will reduce. Then Basel 2 introduce risk-based capital requirement and supervisory reviews. So Basel II is about risk-based capital requirement and supervisory reviews. Then Basel III is talking about enhanced financial stability by requiring higher capital buffers and improved liquidity standards. So these accords collectively promote a resilient global banking system. So every bank in the world puts this in a proper perspective when it comes to risk and the corporate governance. So that's why I have to summarize it. Basel 1 is on capital requirement, capital adequacy requirement. 2 is introducing risk-based capital requirements and supervisory review. And Basel 3 is financial stability with higher capital buffers. Now, you may see in the exam, even if it is multiple choice question, a question and on each of these. For instance, they can ask you, which of the following reflects Basel 1 accord? Then they will now write all these and then put maybe one or two other ones. If you don't know that Basel 1 is focused on capital adequacy requirement, you will fail the exam. So just note about this. Then another thing I want us to know is okay, this one, common risk in banking operations, not this one. This one is very easy to know. Credit risk, market risk, and operational risk. These are risks in banking. I believe that one is easy. Classifying risk based on origin, internal, and okay. Now look at this. Look at this. Identification of risk in banking operations. So this is another one I want you to know. Financial risk, operational risk, regulatory risk, and reputational risk. The risk we are talking about when we started this course is mostly reputational risk. That was the one we are emphasizing on. But there are some other risks that we have here, which include financial risk, operational risk, and regulatory risk. Now, among all these risks, the most impactful risk, this may be subject to debate, but I will just have to give, if you see in the exam, the most impactful kind of risk is this regulatory risk. This is the kind of risk that can close you down, even if you are still performing well, you are making profit. No matter how much profit you are making, this regulatory risk can close you down. And the sanctions that come with it can be so big that you may not be able to survive it. It can revoke your operating license as a financial institution. Then if you are just an agency banking shop, the bank can just revoke the relationship and then you will no longer operate with them. This year alone, let's go to 2024. The sanctions that the central bank has imposed on some fintechs and microfinance banks, even one particular fintech was sanctioned almost ₦1 billion because of regulatory infractions. So the risk can be very, very huge for financial institutions and even for you as an agency banker. So if you ask the most impactful kind of risk in banking or in any financial institutions or any financial system, it is regulatory risk that is most impactful. Though financial risk, operational risk, and reputational risk are equally severe, but this is the most severe one. Okay. Which other? I think we are almost there. So Israel, please, you make sure you share this with them and then share my number in case anybody wants to contact me. I don't know. You have other questions you can ask. Otherwise, I will go back. Please ask questions. Anything you want to ask, I'm open to answering your question. Then if you don't have, I'll go back. I want us to look at Financial Reporting Council of Nigeria and a few other things before we close. Okay, let's go back to the slide if you don't have questions. Okay. So now, this is part of the curriculum that we have. This FRCN. FRCN, for information, is not Federal Roads Corporation of Nigeria or Federal Radio Corporation. No, it is. I know FRCN also is for radio, but this particular course, if you hear FRCN, is Financial Reporting Council
of Nigeria.
Yes, that is what it is. So we have the FRCN Code of Corporate Governance, and it provides a comprehensive framework. You can Google it so you can get more information, because I just mentioned, it's just a mention here. Why I mention it is in case that comes for you to answer. So just have to know that we have something like this. So it includes guidelines on board responsibilities, risk management, internal control, and stakeholder engagement. So adhering to the FRCN code helps organizations enhance their reputation and ensure long-term sustainability. So just for your information, in case you need to know this. Then there's another one you need to know, the NDPR, the Nigeria Data Protection Regulation. And maybe I will explain a few things there. So the role of the data protection and cybersecurity for Nigeria, because as in Nigeria now, we have the under Ministry of Science and Technology, then we have other departments that deal with IT and all that. So to ensure data protection and robust cybersecurity is very, very critical for modern corporate governance. So that is why we have this. One of the things NDPR does is that if you as an organization, for instance, let's say a bank in Nigeria wants to be collecting personal data of their customers, individual and other, they have to register with this organization, the Nigeria Data Protection Regulation Commission. Okay, so they have to register as an organization. You don't just come out and start collecting people's information. Though Nigeria is not that organized enough for everything to be digitalized in such a way that you can, because a lot of people come on board, they start collecting the information and all that. Nobody knows them, nobody registered them and all that. And they use it for a lot of risky things like that that can pose risk to the individuals or to the society at large. So, but the general knowledge of NDPR is that your database has to be known. Your database has to be known to the government before you start collecting this information. So for you to know about this, they can ask you a question about this NDPR. Just know that it is a regulation to protect data, for data privacy and data governance. Okay. All these things are here. All these things are here. So, and there's another aspect of this thing I want you to. There's another aspect of this course I want you to be abreast of. Okay, I think I mentioned this before. Alternatives to two-factor authentication. This one is a very likely exam question. What are the likely alternatives of 2FA? We even have three-factor authentication. Two-factor is just using two kinds of authentication methods. Three-factor is if you use three types. There are some systems that can allow that to happen. Okay, so these are the alternatives to two-factor authentication. Password manager, single sign-on, biometric authentication, and behavioral. Now, why these are alternatives is because it is just significant to only you. For instance, my biometric, my retina is only me that has my retina imprint. Then it's only me that has my fingerprint. So without necessarily doing two-factor authentication, I can use my biometrics to protect myself. So, for instance, most of us have the smartphone that you just use a biometric, it will open. Nobody can open it except they use their biometric. Nobody, with or without password or anything, except they use their biometrics. So these are very authentic alternatives to 2FA. Okay, I don't know. I want comments from here so that I'll be sure that we are actually following. Let me not be talking to myself. Comments. Israel, are you here?
Yes, sir. Yes, sir.
So as soon as we are done, I'm going to send the answers to. I may even develop a few more questions and maybe give to you, but that will
Yes,
not
sir,
be
we are
today.
with you.
They will not be today, but it's today I will give you the answers to all these other ones that is in the slide. So make sure they have the slide because that slide will help a lot to summarize most of the key points.
All right, sir.
Okay.
Okay,
When
sir.
is this course supposed to end?
11:30, 11:45.
Okay. Please ask your questions. Now this time is for questions so that I will answer your questions. Okay, let's go back to the slide. There's something else I want to share on the question. There is a question I want people to take note of. There's a question I want people to take note of. Let's go to the end. Okay, let's look at question 20. The question about the Basel. The Basel Accords are primarily concerned with this. This is the kind of question you can see on the Basel Accord that I just mentioned. So another good thing about this course is that they are not going to ask you completely technical questions that will take you unawares. They're just going to ask you general questions that you are expected to know as a result of practicing banking or agency banking. Like this one now that you are seeing here now as number 20 now. You see that they asking about Basel Accord, but they're not asking you specifically about each of the Basel Accord. They're asking you as a general knowledge of Basel Accord. So this one now, you can see that it's very easy to answer. Who can answer number 20 here based on what we said about Basel Accord?
The answer is A.
A? A is the answer.
Yes, banking regulation and risk management standards. Thank you. Okay, then there's another one I want us to look at. Okay, let's look at number 14. Social engineering is best described as.
It's not on the slide. Number 10 is not here, sir.
I said number 14. Can't you see number 14?
Okay. No, you said 10. You said 10.
We have number
14
10
is here.
You see number 10, but that's not what the one I'm talking about. I'm talking about number 14. I'm talking about
That's what
social
I'm saying,
engineering.
sir.
Okay.
You mentioned 14.
Oh,
You
okay,
mentioned 10
sorry.
instead of 14.
Okay, sorry. So look at 14 here. Social engineering is best described as. Who can tell us the correct answer for number 14 there?
E. B is the answer.
Somebody said A, somebody said B. Which one is correct?
B is the answer.
B is the answer. Do we accept? Is B correct? Process of enhancing business efficiency, A. B, a technique used by cyber criminals to manipulate individuals into divulging confidential information. C, a
B
way
is the
to build
answer.
corporate. Yes, B is the answer. Why is B the answer? Why is B the answer? Who can explain in a more detailed way?
Social engineering has to do with the interface between humans and social media and other online processes. So through that, criminals can track one's ID and other things, and they manipulate it to steal from them. A good example can be what we see when they will just send you something on WhatsApp and tell you to click. When you click, that might be the end of your account.
Exactly.
Those are the kind of things
So,
they do.
Yeah. So in social engineering, the hacker or the cyber criminal don't necessarily need to interface only with the system. It needs a human element. The person needs a human element in order to get access. So it's not a code. The person doesn't have to write a code to crack the system. Somebody has to aid the person to get in. 2 days ago, somebody called me on the phone. Was it 2 days ago? But it's just within the week. Somebody called me on the phone and then I answered. Okay, no, it was weekend. It was on the weekend. It was on Sunday. I said, hello. I said, yeah. He said, are you Obioha OT? I said, yes. He said, okay. That he's calling from First Bank. I said, okay. He said that my my BVN is they are doing a review and my BVN was flagged. You know, that this kind of thing has been on the public space. So this kind of fraud tactics, this their updates. They don't cast data. You understand? But they still use it to get somebody. So he was saying all those things. I said, okay, which branch of First Bank? He said they are working from the head office. He now said, I should confirm my NIN, I should confirm my all those ones that if I can't confirm it, that my account will be blocked and I will not be able to do transactions. I started laughing. So the way I was laughing, he now knew that no, this one now will be bushmeat where they go just chop. So that was it. But some of these things that are this simple, they actually use it to get people. Like I traveled some time ago, and one of my aunties like that, she's a health worker. So she was doing a seminar, like public awareness health seminar like that. And one of the things she wanted to do that day was immediately she closes, she goes to the bank and makes a withdrawal because somebody sent about 350,000 naira. They were doing something in the house. So somebody called her now and said that your account is flagged, that we are doing review in the bank and your account is flagged. And because of that, we are going to put PND on your account. That's a temporary post-no debit. Yes, in your account. And you are not going to be able to make a withdrawal or not. So she started panicking that we need this money. And it was on a Friday. She said she needed that money to do her transaction. So the person said, okay, if you want to make withdrawal today, let us know all this. Do you know that this lady right there and then released all those vital information to this social engineer? And before you know it, she started receiving alerts and they cleared the whole 350,000. She rushed from that place to the bank, and then the bank was like, that you've taken your money. She said she didn't take the money. Somebody called her from the bank. And that's why I asked her, who called you? From which bank? Before you know it, it dawned on her now that they don't catch them. So these things happen until tomorrow is going to continue to happen. Okay. Then another aspect I want to bring to our attention, because it's part of what we need to know in this course, is this aspect of ransom cash out from POS points. Last month alone, the cases that came to my attention about people cashing out from the POS shop, it is more than 5. This beginning of the month, I have one now that is at hand that we are treating. Somebody cashed out and kidnappers cashed out. They kidnapped somebody in Enugu and then they came to Benin to cash out. Okay, and millions, a lot of millions are involved. Now, the POS points, according to the claim, what they were telling me, nothing much happened on the POS point. The only thing that happened was that little amount of money was transferred from the kidnapper account to the POS. And the POS woman is telling me that it's just about 10,000 naira. But police, whenever they are doing their investigation, all they care about is that which accounts are the accounts that are linked to this ransom cash out. All the accounts that are linked, they are going to pack all of you. And they are even demanding millions of money, even if it is 10,000. And a POS person who does a transaction of 10,000, is it not only 300 naira that they will pay you? After receiving only 300 naira as profit from a transaction, and that 300 naira is not even your net profit, it is your gross profit, then police will come and arrest you all the way from Benin and put you in a cell in Enugu. And you'll be in that cell and they'll be telling you that they are taking you to court and you are going to pay millions. So some of us that are practicing, these are some of the things you have to be very cautious of. That's why I say, for people that pay out for transfer, like somebody you don't know comes to transfer money to you and you pay, even 10,000 naira can put you into big trouble. So it is better you know the people that are transferring to you. I'm telling you this, for your business to really grow, some people may refuse to do KYC with you if you ask them to identify themselves before they transfer money to you. But if it is somebody that just brings a ATM card and does a transaction, that one no concern you. He don't do his transaction, he has gone. It will not be linked to any account that is related to you like that because it's a cash transaction. But for a transfer transaction, it will connect your account with that of the kidnapper, if it is a kidnapper. So I think you need to do a little more due diligence. For me, I advise my people to ask for a means of identity, or at least take a photograph of them and document properly. If the person actually has ulterior motive, or if the person is a criminal, I think the person will decline politely that, no, I don't want you to snap me or all that. But one of the things that make us not to be very cautious or maybe do due diligence is because of the competition. In one street like that, you have up to 10, 20 POS people. All of them are struggling and struggling for customers. That is it.
50.
50. We are going to handle all those things will be really taken care of. It's just a matter of time because there is something on ground now that we are working on that is going to address some of these things. But for us to really prevent something like this or protect ourselves, because let me tell you, the police, they don't really care. Sometimes, like this particular case I'm telling you that is happening right now, they have been able to trace the kidnappers. According to the police, they have been able to catch them, but they refuse to release the POS people that just did 10,000 naira transactions. They refuse to release them. That is how the Nigeria police works. So in some of these things, we try to counter them, we try to kick against it and all that. But you know, they are police now, they will continue to say those people are still relevant to their investigation. So because a capital crime has been committed, a very big crime, they continue to suffer those people, continue to put them under pressure and continue to make some unreasonable demands from them. Okay, so if you have challenges within your POS location or you have any issue you think we need to put mouth in to resolve, you can still ask those questions, even though it may not be part of this curriculum, but it's important that we know it because it's part of the ways to control challenges that has to do with risk control and the
well, sir, I have tons of issues to discuss. Now that you've opened the windows, I think I will quickly state this. The business is no longer pleasant. As I speak to you, I run at serious losses at my location, and I've closed locations too. All because the business as it is now is without control. And I'm really expecting CIBN and other bodies to put pressure on CBN and let them work within the regulatory framework of mobile money. Because this idea of everybody carrying POS, you don't know which one is agency banking and which one is, what's it called? Those that run around with, that use POS for their merchant POS.
Yes.
If these things are not done, if there's no straightforward dichotomy between both I think this problem will continue. I'll give you an example. I started business. I was the first person to start business at a particular junction. As I speak to you, I have more than 30 POS in a less than 25-meter radius. 25-meter radius, more than 30, 40 POSs. And when this thing is like that, unhealthy competition sets in, people begin to do all sorts of things. And honestly speaking, they even steal from customers. Those are the things we are experiencing. So sometimes I open my business, I don't do more than 2-3 transactions in a day. So that is all the frustration, and I really want us to really address this, because if we don't address it, the whole thing will be muddled up, and it will not be interesting to a lot of us, and we might go elsewhere to invest in the little we have. Thank you, sir.
Okay, thank you so much for that contribution. Let me just speak to some of the issues you raised. For a long time now, the issue of spacing has always surfaced. As an our association, that is AMBAN, most of our platforms or during conferences, seminars, symposium, these kind of issues always come up. And most of the time, the regulators, particularly the central bank, they are always present and we talk about it. So it has been a recurring decimal like that. And most of the practitioners within the system have been people that are less informed or uninformed. One of the ideas of bringing this agency banking certification is to see how we can have a crop of certified professionals within the system, because the system is just like a free-for-all for a while now. So now this certification program have started. So we have started streamlining. Let me assure you, and I'm very sure of what I'm saying, because I've operated at that level, that in time coming, and it's very close, you will see many more policies from the central bank about the criteria that will qualify somebody to be able to run a POS shop or even to work as a POS attendant. And this certification is going to be part of it. So these things will reduce this proliferation we are talking about. Then again, there is something we are really doing right now. I may not give you all the details, but it's going to address this because it's a matter of national security, especially where kidnappers, criminals can easily cash out from agent location and disappear into thin air. So it's a big concern to the government. Recently, the House of Representatives invited all the stakeholders within the system, and I was there as well when we went to discuss this issue. And it's a very big issue. Laws will be made about it, and the central bank is going to roll out policies. So those of us that are doing this program, if you want to do agency banking at the long run, be rest assured that you are doing the right thing. You are not in the wrong place. Why we want to start this way is because you cannot actually regulate and control without being sure that people are properly trained and certified. That is why we are here. Okay, so the aspect of enforcement and all that, AMBAN started agent joint task force. That is still in progress, but because of some things around the implementation, we pedal on it. But within some months coming now, weeks coming now, there are some other things around control and the compliance that we are going to roll out in collaboration with both the central bank and the government. So, but I don't know where each and every one of us is operating. One of the things we need to do in order to protect our business as well within all these places is we can do whistleblowing. Like somebody like me, when I see certain kind of malpractices going on, I identify them. If it is something I need to escalate, I escalate. We, as an association, we are working in collaboration with the law enforcement agencies to equally give vital, intelligent information that will help. Okay, so I just want to assure you that at the long run, some of these things will be nipped in the bud. If you look at agency banking regulation from the central bank as at 2023, okay, they revised policy on that. You discover that so many things that we are seeing in the business now is not supposed to be happening, but people are just practicing anyhow they like and all that. That is why regulation is supposed to make this thing stronger. And let me tell you, the reason why this is happening is because the central bank gave the right to regulation to commercial banks, and the commercial banks are in competition. So you cannot regulate what the business we are competing for. I've said this severally on the media. I've said it on AIT. I've said it on Channels TV. I've said it on Rise TV. I've said it everywhere that you cannot control where your interest is. So we have been able to convince the government that the people that are supposed to regulate agency banking, which are the financial institutions, they don't have the capacity to do that because they are interested parties. But we have third parties that have the business as the key stakeholders. In collaboration with the central bank, we can bring a certain kind of regulation around it that will arrest some of this. So that is being worked on. I can assure you that something that will help the business is coming. But for now, we just try as much as possible to protect what we can protect, the much we can do. Okay, I think that addresses your concerns to some extent.
Yeah, thank you, sir.
Yeah, thank you. Do you have other contributors? Because my time is almost up. I have another engagement. If you notice, my phone has been ringing and ringing. So in case you still, like I said, I'm open to further consultation, and I'm not charging you anything. Just give me a call, ask me any question, and then I will give you an answer. Then for the exam, I'm going to compile more questions, likely exam questions, because it is better you practice from the questions. Because if you are reading, like I've told you, some of these things look abstract, especially to an agent banker, especially except if it's somebody working in an IT department in a bank, it begins to make some sense. So I will compile more questions and send to Israel. But today, I'm going to send the answer to these questions. All the answers you require, I'll forward it to him. He will share it with you guys. Okay, Israel.
Sir, thank you very much, Dr. Obioa. Really appreciate your time and your lecture and your insights shared with us. I say thank you very much, sir. God bless
Thank
you,
you.
sir.
Thank you so much.
Yes,
So
sir.
I'm going to sign off now. God bless you all. I'm going to send this to Israel and he's going to share it with you guys.
All right, sir.
Bye for now.
Thank you,
Yeah.
sir.
Thank you, sir. God bless you.
So to everyone,
Thank
I'll
you.
say thank you again for joining this lecture, this class. So thank you for your time. It won't be a waste, and best of luck to the upcoming examination. So I have some announcement actually. So by 12 today, sorry it came late, 'cause I got to know yesterday afternoon also. So I posted on the groups. I just remind again. So Seben is hosting another training on how to use the exam tutoring platform. I know some have used it last October for the exam last year, but they want to do a revision and a go around how to install and everything, how to use the exam platform by 12 o'clock. So I'll share a link to the group. And I think Seben have sent to everybody's mail, but I will still share to your WhatsApp platform so it will be easier to access than going searching through your mail. And tomorrow is the last session by 1 o'clock tomorrow. Let's try to join. I know you are going to church and we have some other activities, but I still like to plead. So if you can join one, we can finish earlier and continue with our weekend activities. So I'd like to say thank you. So please, 12 o'clock, please join the other link. It will be shared on the group.
Please, Mr. Israel,
Yes, sir.
I have been asking. I can't print my docket.
Yes, sir. That's why I said you send that mail.
and
So I'll follow up with the mail you sent
I've
today.
said,
I'll follow up.
were you the one? You are the one I've been relating with. I've been doing that. I've sent that mail about 4 different times.
The one you sent this morning,
And
I'll follow up
nothing.
with it, sir. Don't worry, sir.
Please, so I
Sir.
can. Thanks so much.
Sir.
Yeah,
So
okay.
everybody now, important, please, everybody print your docket. So if you come to your docket, please, just send me a personal message. You understand? So I can just follow. Because if you don't, it may, before it's too late, first step I'll say it's too late. So just try to print your docket today. And if you can't print, if I see many courses, that means you can't print. But if you can see this course you paid for, they are good to go. Just print it, hard copy. You understand? So by 12 o'clock.
I need to print it so I upload it in
Don't worry,
my
I'll follow up.
thing.
I'll follow up with the mail, sir. Don't worry,
Okay.
Mr. Kola.
Yeah.
So
Thank
by
you.
12 o'clock, please. Can you just take me 10 minutes to rest? Then please, when it's 12, let us join the other meeting, please. Thank you very much. Do have a wonderful
Thank you,
day.
sir.
Thank you, sir.
That's right.
Thank you very much,
Thank
Mr.
you.
Israel. God bless
Thank
you.
you. Thank you, Mr. Israel.